And we can begin. So great to have you here, and welcome to this new Solarplaza Hungary webinar, Regulatory and Project Financing Outlook for PV in Hungary. Already with us, Csaba, Polgar, partner at Pontes. Hello, Csaba, good to see you. And Istvan Pocs, who is country manager at EDP. Great to have both of you here today, sharing your contributions. Just some very short intro from my end. For those of you who are not aware of Solarplaza, our mission is to accelerate the sustainable energy transition with more than 200 conferences organized. This year, we're coming back to Hungary for the 4th edition, and lots also of knowledge sharing and content related to PV. Of course, we also have another branch of Plaza Consultancy, specifically for IPPs and developers looking to enter new markets, looking for co-development opportunities, or acquiring new projects. So feel free also to get in touch with me related to that. And something we are very proud of is also our Solarplaza Foundation, where we support some charitable projects across the globe, as always related to PV. Just some practical notes. So look, we try to make this webinar as interactive as possible. So please send in your questions. We have a Q&A at the end dedicated, where Istvan and Csaba will be answering your questions. For any technical issues, my colleague Bo is here to solve them, so you can also send them in the chat box in the Q&A. And of course, we will make available both the recordings and the presentation slides. Just give us 1 or 2 days; they'll be in your email inbox, so you will receive them. Quick intro of our speakers today. So Istvan Pocs, who is country manager at ADP Renewables. Istvan, I think, with quite a lot of years of experience there in energy industry already. Of course, today he'll be covering mostly the topic of project financing, given also his background as an economist, and with a focus, of course, on this region of Europe. And Csaba Polgar, who you might recognize, who's a partner at Pontes law firm in Budapest, and he's involved in the advisory for renewable projects since 1999, of course relating into project development, financing, and M&A transactions in Hungary. So as I said, agenda, we'll start with Istvan, we'll go then for Csaba's presentation, and again, send in your questions related to today's discussions, and we'll answer them at the very end. And I think with that said, I will leave the stage at this point to Istvan to guide us through the whole project financing landscape now in these very interesting times with rising inflation, super high interest rates. Curious to see how we can make the most out of this today. So Istvan, the stage is yours, and then we'll go to Csaba.
Okay, so practically you made a really nice introduction, so I really don't want to stretch it more. So just few words about EDP, what is doing right now. We have 14 gigawatts in globally, and we managing a 200 megawatt portfolio in Hungary. So that is for that. And I'm ready to continue with the presentation. Yeah, possible? Well, okay. So I really wanted to talk about to understand the global drivers, and after that narrowing to the country level. So let's start with that. So practically, from finance point of view, we have three main drivers what we are considering where we investing. Firstly, are the financials on the right place? So in terms of back, in terms of project financing, in terms of credits, whatever, are the and the revenues are on place? Are the market is mature enough, so it is rather an emerging market of or where we need to consider more risk during the investment period, or rather a mature market where we know what we can expect, and the opportunities what we're having on the market, because the market can be really mature but practically really competitive, so therefore obviously the investment opportunity is much less. So what I want to express that we moved from the Hungary, the solar especially, moved from the 6.5 gigawatt target, which was in the previous national climate action plan, to the 12 gigawatt target. It is still under the review of Brussels, but it is the Hungarian government position. And also in terms of the development of the capacities, we are really good exceeding the 2030 previous targets, because in 2024, according to my calculations, we will already at the 2030 levels. There were some important legislative changes, and Csaba might be much more punctual in this case because he's a lawyer background. I really want to highlight one which really helped for the market to be much more consolidated and much more predictable. So we had in 2020, at the end of 2022, a new decree which required from the investors a real commitment for the capacities when we want to connect the PV plants in the to the grid, because this predictability required for planning and design of the grid by the TSO and the policymakers, and you also had to increase your bonds, which was already a request formally, but it's practically cleared out the market and made a created a very predictable line. So from, let's say, from EDP point of view, we having till 2027 a very clear line of how and what we want to invest. Also, there are regulation that if and then you're receiving a capacity for a later period, you can readjust the commercial operation date, and you can move it for earlier date with flexible capacities. The good thing is that practically all of these new policies are openly discussed with the solar associations, and by involvement of solar associations, with the support of the HEPURA, the Hungarian Energy Office, with the support of Energy Ministry, and also with the support of the TSO, who is at the end of the day in charge to creating to giving us the network. From investment point of view, it is also need to be mentioned that practically 2024 is the end of the wave of the feed-in tariff projects, because this is the final deadline where you need to connect your capacities, and from this date you can just practically invest to the operational power plants which are under FIT scheme, but all others either receive CFD support or we are trying to receive remuneration and revenue scheme over the merchant market. And by the numbers, so we are narrowing it to the to Hungary. So as you see, there are roughly 3 gigawatt of FIT, and this will be the end of the story. And 0.8 gigawatt CFD projects had been awarded during the several sequences of the METAR scheme, because of the completely different market. Let's say low interest rate, low capex. Even the expectations for the capex was very low. These CFD projects received a very low tariff, which turned them unviable to manage it, to execute it within the current environment. So what the investors done from financial point of view, they could either reschedule, thanks to this decree, their COD. So I know several projects on the market which shifted their COD to 2027. Flourishing the reason of the scheme, which is the CFD providing, because the CFD scheme connected to the inflation as well. So high inflation, which means higher tariff when the project starts in operation. Let's say, so for that case, the project which now would operate on a 50 euro per megawatt hour scheme, which is really under the reasonable level, in 2027 could reach 75 or whatever. I just mentioning to you one of the examples what we are already checked and considering. The second opportunity was to get rid out from the metal scheme and immediately produce your electricity over the merchant market. Some investors can do it, and on the later stage of my presentation, I will tell it why I really think that it is not an opportunity for the most of the market. And which has happened thanks to this decree again. The TSO could complete the home exercise, planning the new capacities and releasing the capacities for the investors under the new scheme, and let's say wipe out from the market those interests which are not really serious, just saturating the grid. So in the last in this summer, the investors received the capacities and 1.6 gigawatt PV capacity and roughly 300 megawatt storage capacity is on the market under development with a different time horizon from 2025 till 2030 range. Well, and what we see that the government really want to continue to see PV producers to enter to the market, because we are just reaching the 6 gigawatt capacity in the upcoming year, and it is expected in the next 6 years to add additional 6 gigawatts. So it's roughly 100%. To be reached. So, and why I talking about that merchant projects are, I really do not believe that it could take over majority of the market. So I'm a financial guy, and I really like to understand the companies and the projects on a financial within a financial matrix. And let's say there are two angles. So the financial risk, which is the dimension of X, and the business risk. And you can really easily position the type of companies which are rather coping with a higher financial risk, and these are renewables, because they mainly financed by loans, or let's say by bonds. And on the opposite side, the oil and gas market, which is practically not financeable by normal project loans, very rarely. Let's say maybe big LNG projects, and they are producing their products on the volatile market. For that reason, we are taking a higher business risk. And there is a captive market for the classic utilities, national electricity companies holding the network, holding the gas market and other. And in the right top, this is the finances guys calling it's a corner of the death. We already seen in the, I don't want to mention names, it was a huge German utility who tried to play, who tried to capture both part of the of the matrix and play with high business risk and high financial risk. Well, obviously it's you cannot go too long with this high risk. It will turn you to bankruptcy, and after that restructuring of all of your businesses. So the lessons learned from this this story, from this diagram, that to continue investment over the renewables, if we don't want to change the business model, and we don't want to keep too high level of equity on the business and just keep the wheels moving, we need to continue either with the feed-in tariff system, either with the CFD system, either with PPA, B2B PPAs, power purchase agreements, because at least on revenue size, this is de-risking the operation, yeah, and this is vital. So market dynamics of renewables. Today I read it was totally in line with my findings during the preparation for this meeting. So what we've seen, we've seen a really good share price increase during the COVID period. Obviously, everyone thought that this is the case of this is the time for renewables, and we need to go for cleaner. We need to change the things. But what we see, practically all numbers turn to red, and we are declining share prices. The good thing is, what I would really want to deliver the message to this audience, that if we are looking the 5 years share price change, we see that the clean renewables, like let's say EDP or Iberdrola, they really deliver to their shareholders a high value increase of high value. So it's worth to invest to us. What we see on the oil and gas markets, so the total opposite. So we were suffered during the COVID crisis, and now we are all in green. We are all receiving much more inflow, whatever the newspapers and let's say the policymakers thinks. We are flourishing because everyone investing for this short period. Well, this is it. We know yourself, know your enemy. You will be never in danger. So the good thing is that when we are targeting our competitors, let's say on sector level, now we are targeting oil and gas. That means we are out of the dummy period when we had to be treated very carefully, like little babies. We are big enough to change the financial markets. Okay, so going back to Hungary, and this is really connecting the previous slides when we've seen the global renewable companies' share prices are falling. The share prices are falling exactly for the same thing, which is happening in Hungary because of the high inflation rate, which is practically vaporizing the margin, the very small, modest margin over the assets. I would say it was not really supportive for the past, that some of the policymakers started to invent beyond the merit order model, the inframarginal margin model, because it's really increased the risk awareness of the investors, how the markets will be managed on long term. But the good thing is that In Hungary, the inflation is, however, that was the one of the highest in during Europe. It's falling, so it's according to the governmental actions, also according to the very strict and very hard movement made by the central bank. And on long term, the inflation rate is absolutely in line with the regional inflation targets. So according to the Minister of Finance in Hungary, so we're targeting euro introduction in 2030. And as you see, we have very strict targets how to keep the inflation level on an acceptable place, which will bring back us to the good position to invest to solar for long term. How the central bank and the markets are trying to fuel again the market. At very first, the central bank in the past not just acted as central bank in Hungary, but also really was really supportive with green instruments, and they invented the Hungary Go program, where there was a credit facility which was in lower than the market level. They supported commercial bank to issue green bonds, fueling the market, and they will continue this activity. Of course, when the inflation level will turn back to the acceptable level. What is the new considerations? I had an opportunity to have a talk with high-rank officials of the central bank 2-3 weeks ago. The one of the mechanisms where how the central bank can support the commercial banks to produce more cheap credits, so they can, if the commercial bank financing green projects by the transparent and an acceptable mechanism, the commercial banks can reduce their capital adequacy ratio, which means we can create more credits for the market. We also considering to support a guarantee fund, because from central bank perspective, it's really worth to fuel the market with green electricity, because it's against of the inflation. So this guarantee fund will back the commercial PPAs on the market, and will contribute as a third layer to this one. It's good to think that geo market is already on place in Hungary, so it's a new revenue model for the PPAs. What we see, that first power purchase agreements are happening, smaller and higher levels. The market is still emerging, so I would not say this is the gold rush, but let's say comparing to the last year, or let's say previous year, when it was almost UFO in the Hungarian market, we can see that the wheels start to move. Okay. Maybe I guess. Sorry, just I'm in a hotspot. What is also important, CFDs will be supported further. So the new National Action Plan targets, they still considering CFDs as a major tool for the project subsidy from the governmental size. Well, there are talks to change the CFDs to euro-based, because in that case we can achieve a better rates. Let's see. Obviously, the central bank not really favor of this idea, but we are still lobbying for that. New tenders, CFD tenders. I expecting that do new tenders only with storage, because we already seen negative prices also in the Hungarian market, which obviously the officials don't want to support negative prices. And then there is a good thing that the market coupling is already done, and on the intraday market we see much higher level of liquidity, which on revenue side obviously is good. There will be a new tender for storage. I expecting it for the next week, and the size, according to initial plans, it was 800. I have doubts megawatts. I have doubts if it would reach that level. I expecting at least 50% at least. And trying to move my slide. Okay. Hope I did not click too much. This is my final slide. Definitely, we need, before the investments, we need to check again, check twice your financial models, because the revenues are much more narrow. So only the good projects can prevail during this period. But because of the falling inflation, the weighted average of cost of capital should be also corrected back, maybe not to the levels of the pre-COVID. So this is the perception of bankers. I had a talk with some heads week ago, but definitely is on the right track. Legislation, I would say, let's say, how we perceive the new capacities, how we calculating the new capacities, which need to be done for new capacities, is on place. It's giving much more confidence for the investors from this point of view, and Csaba very soon will color this picture a bit differently, but at least finally the investors will face with less scrap projects, and this is good for those ones who are serious. Now we can invest from operational to the greenfield projects in Hungary. It is really depends on the appetite of the investor, and look, I'm still positive. I'm country manager of the company, and really believe that the sector midterm perspective is good, and it is worth to invest. And the solar is highly supported by the government. So thank you very much for listening, and I'm ready for Q&A.
And I think we could not have hoped for a better transition, a more optimistic one. And of course, thank you very much for providing the whole framework of where we stand and what are the mechanisms and the drivers. I think let's move at this point to Csaba, which is right here. So we'll be also giving the flavor and context of what is happening in terms of legislation. And please, of course, feel free. I remind you, sending your questions. We'll answer them after Csaba's presentation, the Q&A. But Csaba, I think we'll go with you now onto the legislative landscape here and the most recent changes in Hungary.
Thank you very much, Nicolas, and thank you, Istvan, for this presentation about what's the landscape from financial perspective. Obviously, Istvan, as the country manager of EDP, which is one of the largest players the Hungarian solar market. Obviously, he must be positive, and then obviously they see opportunities, which is great. I mean, we Pontes as lawyers, obviously we have to assist clients in actually implementing the transaction, so we have to be a little bit more risk aware. And in the first part of my presentation, I will focus on one of the recent phenomena which we are experiencing in the case of acquisitions by foreigners in the solar sector, and I want to give you some insights about that. I think, as Istvan said, Nicola gave, I mean, introduced me as well nicely, so I would skip the first two slides. We are basically here now for 2 decades to assist clients in the renewable sector, so we have gained pretty material experience on both sides of the bench, either on the developer side or investor side or project financing side. So we've seen a lot and gathered knowledge which we are happy to share with clients. So let's move on. I think I somehow cannot control now the slide. Yeah, that's okay. Thank you. It's okay. So as Istvan mentioned, the solar market has become matured enough to actually carry out exits or even secondary sales. And obviously the investors would be looking at what approvals, what risks are to be faced, what approvals are to be obtained so that they can acquire projects in Hungary. And for that, there is a very important legislation in place, actually 2 pieces of them, which control how foreign direct investment, for which FDI stands for, can be implemented in Hungary. And in a nutshell, I would summarize how the framework looks like, what are the risks, how it should be interpreted, and what we have experienced recently. And just to start with the first, there is a reason why we thought that it would be of interest to the audience is that pretty recently, in the past couple of months, we as Pontes and other law firms as well experienced rejections in terms of FDI and screening approvals by the competent minister, which is in the regime which is applicable for us is Minister Márton Nagy. And then obviously in earlier projects it was the FDI approval was taken as a procedural step which must have been obtained, but in order to be able to financially close a transaction. But given the recent rejections, it became somehow a little bit as a boogeyman of a transaction timeline, and given the uncertainties in the legislation, we do believe that it's very important from the outset to look at whether it is applicable for that particular transaction, and if there are structures which could be implemented, obviously in full compliance with the applicable laws, in a way that FDI approval is not sought for. So just to start, so there are actually 2 parallel regimes for FDI screenings. The first was implemented in 2018 as an implementation of European regulation, and that in terms of solar power generation is only applicable for assets which are larger than 50 megawatt AC. Now, as the vast majority of the projects which we know of the market are all so-called small power plants, which are below 50 megawatt on the AC side. Therefore, we do believe that that 2018 regime is not applicable in most of the cases. However, the second regime, which is to be applied in parallel and which was introduced as part of the status of emergency legislative package in 2020, is applicable without any regard to the size of the project. Which means that if the main activity or the activity of the SPV to be sold is power generation, then in terms of the subject matter of the legislation, it is captured. And then the next the next condition to be looked at whether the investor who is trying to acquire that asset is captured by the legislation, and investor is defined as anyone who is domiciled or controlled by an entity which is outside the EU or the EEA, the European Economic Area, and Switzerland, or if the entity is registered in the EU or the EEA, if the majority control of that entity is controlled by an entity which is outside the EU or the European Economic Area, which basically means that all Chinese, US, UK investors would be captured, and if other triggers are met, then they have to file an application. and obviously there is a large chunk of the market which is which will be captured by that. Now how does this whole application works, and what are the risks to be looked at? So first of all, unlike in other European countries, there is no possibility for a pre-notification or a pre-consultation prior to filing. So basically, investors and their advisors have to make really a judgment call whether, based on all the circumstances, this is applicable or not. And then the most important factor to be looked at is that what is the value of the investment, and apart from being a strategic asset which is to be acquired, and that value currently is 350 million which is around 900,000 euro, which is pretty low. I mean, if you put it into perspective, that's probably a price around the price of 1 megawatt asset in terms of enterprise value. So that's pretty low, and most of the assets would be captured by that. Now, the process itself looks in a way that once you have the acquisition agreement package, your documentation package signed, you have 10 days to submit to the minister. Basically, you have to describe what is the background of the investor, who are the ultimate beneficial owners, by providing a detailed organigram of the investor group, and also you have to submit the SPA or the purchase agreement itself. And the procedural deadline is 30 calendar days, which can be extended with 15 business days if it's not enough time for the minister to award or to pass the decision. And unfortunately, in the past couple of months, we have been experiencing delays in that. In certain cases, more than 3 months has passed without any resolution. So it is obviously creating an uncertain environment when the year end is coming. Obviously, transactions should be closed before Q4, and therefore it is creating a pressure on the projects so that the necessary cash flow can be generated. Now, what are the risks associated if someone decides wrongly that the structure or the transaction itself is not subject to disapproval? I mean, these are pretty severe. So first, one potential interpretation of this 2020 decree is that the transaction is invalid, and no shareholder rights can be exercised by the acquiring entity if in a later sort of investigation or control procedure the minister finds that transaction itself should have been approved or should have been submitted for approval, which is obviously pretty severe. It is therefore like a 0 or 1 call. So you have to really consider all the options, and make the submission before the preconditions are there. I'm trying to move the slide. Okay, now it's happening. Okay, thank you. Just going back a bit. Yeah. So apart from the invalidity itself, and apart from not being able to exercise shareholder rights in terms of the acquired asset, there is also a pretty high risk of fines to be imposed, and that fine is also can be pretty severe itself. How we interpret the applicable law is that there is a minimum and maximum of that, and the maximum being being 2 times the deal value, which is the investment value itself. So that's that's pretty significant, and therefore due consideration must be paid for that factor. Now, given that that there is a high risk associated, and given that we have experienced recent rejections by the minister, where the justification is very short. The justification is purely saying that the acquisition itself would be against the national interests of Hungary, without going into further details. Obviously, as lawyers and the market started to think about really what can be done that in full compliance with the governing laws, but how submission can be avoided. Now, one of the potential structures which we have investigated is that there is a clear exemption in the regulation which says that if the target itself is an entity which is registered abroad, and that entity is holding the strategic asset which otherwise would have been subject to filing, and that holdco, that interim holdco, is sold, just to repeat, which is outside of Hungary, then that transaction is not to be submitted. And I think that creates the possibility that, for example, if the asset itself in Hungary is held in an SPV, which is controlled by a foreign mother company, and the original plan would have been to sell the Hungarian SPV, then obviously with the creation of an interim holdco, and then by selling that interim holdco, we do believe that the submission can lawfully be avoided. Obviously, all circumstances always must be taken into account, and that not you know, it's this potential solution may not work in all circumstances, but we believe that this is one of the exemptions which are clearly set out in the Act, and that can be potentially used. Now, what is also important is that in terms of how the dynamics and how the structure of a solar asset sale goes in Hungary, it's very often projects and developments are sold in a ready-to-build status. Now, if that is the case, that obviously means that the sheer value or consideration which are to be paid for the shares of that asset may be lower than the 350 million half, because all the construction and the capex are to be incurred later, which means that if the sale is structured in a way that there is an EPC agreement signed in parallel with the SPA, and payment for the capex of the construction is paid through or via this EPC structure, then it might also be a way to actually lower bringing the investment value under the 350 million threshold. Now, two final potential structures there which have to be taken into account. and the first being a structure under which the acquisition is the payment of the consideration or the payment of the purchase price is structured in a way that there is a certain element which is to be paid out later based on certain triggers or conditions which are either there or not there, and that is called an earnout in a share sale and purchase agreement. And if that earnout is genuine and really there are external factors on which the earnout payment is dependent, and then we believe that that earnout element should not be taken into account when you calculate the 350. But as I said, this structure must be genuine and must be based on real business agreement of the parties and should not be just simply created in a way, just to actually bring the value under the trigger threshold. And the last but not least, obviously a number of projects are sold in a situation where there is external debt already incurred on the level of the SPV. And although that external debt will be calculated into the enterprise value of the total deal, the external debt will have to be deducted from the purchase price. And therefore, if there is external debt either towards a financing entity or towards, for example, an EPC contractor, then we believe that is also an element which can be deducted. And if it helps the transaction to bring below this threshold, then that could potentially also be used. This is not the same with intercompany loans. We believe that if the intercompany loan is transferred together with the share to the same entity, then it probably will count as an investment value, and therefore it will be counted towards meeting the 350 million. So that's it in a nutshell in terms of FDI screening. And as a sort of last recommendation or words of advice here, we recommend to really look at the structure itself, analyze whether the triggers for application or filing, mandatory filing, are there. Investors should digest and analyze whether genuinely there can be a structure which in full compliance with these laws but still can be used to avoid filing, to take out the uncertainty from the transaction. And if not, then filing must be done, otherwise the risks which the investor faces are very severe. So that is something really to be looked at. Now turning to the second part of the presentation, it will be a little bit shorter. I just wanted to talk about a little bit about a market phenomenon which we also experience and working on a number of these projects and structures in the past half year or years or so, are behind the meter PPAs. As Istvan said already, he mentioned that there is a strong demand among large corporates with Hungarian production facilities to somehow stabilize their exposure to electricity prices, and obviously with the forecasted electricity prices, power prices going down a little bit, that pressure has eased a bit, but still the market demand is still out there for that. And unfortunately, certain legislative changes which occurred last year put a little bit of a pause on that market development. But we believe that by now, certain market players who have worked on the solution for this particular AFRR issue, which I will mention later, probably they have now created their products in terms of software, hardware, and the ecosystem of this whole issue based on which these projects can continue. So just to give you a little bit of a feeling how, according to the Energy Office, market penetration looks like. up until Q2 2023, there have been altogether 130 megawatts of behind the meter power plants actually built in Hungary. You see this red column in 2023. We believe that the relatively small amount there is due to the fact that the market basically didn't know how to tackle the new requirements which are set out in the operational code of Mavir. Now, just to summarize, what are we talking about here? So, what is a behind-the-meter PPA? It's basically a development of a small power plant on the site of the off-taker, which is normally a large production facility, without the technical possibility to feed in electricity produced by that asset onto the grid. Normally, the assets which are built are to be owned by the producer, which is normally a PPA service provider or an investor, and that investor or that producer is actually incurring the capex and financing that development based on the backbone of the PPA, which is signed with the off-taker, which is the facility itself. Now, what we've seen is that it's very important to analyze production curves consumption curves by the facility, total consumption and seasonal consumption by the facility. Now, obviously, for the reason is that if there is overproduction in the summer month, which cannot be consumed, then it will put an unnecessary financial burden on the off-taker to pay for a production which it is not able to consume. In terms of permitting, there is often misunderstanding and misconception in connection with that. If the asset itself is larger than half megawatt, 0.5, then it's pretty much the same permitting procedure which must be attended, including the so-called small power plant operational and establishment permit, building permitting procedure, grid connection planning, grid connection agreement, grid usage agreement, etc., despite the fact that this asset in normal circumstances would never feed electricity onto the grid. And for that reason, normally it is the SPV or the investor who is building the asset, who will be owning the asset, will have to acquire the permits for the operation and for the construction itself. We've seen a number of PPAs and tender processes which were differing from the perspective whether the price is fixed or indexed. It is really a financial call. Obviously, in a high inflationary environment, off-takers would prefer a fixed price, which would probably obviously raise the initial price, but it would provide stability in terms of the for total duration of the PPA, that the price is fixed. Now, the last on this slide is a very important one. As Istvan mentioned, the grid access, obtaining grid access has become on one hand more difficult in the past 2 years. On the other hand, it became somehow more predictable in terms of what grid bonds, deposits, etc. are to be paid. Now, the good news for behind the meter type assets is that grid access can always be applied for at the DSO or the TSO. They do not need to be participating in this individual tender procedure or the normal tender procedure, but they have to undertake this so-called afrr obligation. Now, a couple of words about this afrr obligation. It's basically set out in the operational code of Mavir that these behind the meter assets will only receive an MGT, which is the technical and economic information letter to be sent by the DSO summarizing what technical and financial conditions are to be met in order to be able to grid connect your asset. This MGT will contain that the asset itself can only operate, can only be put into operation if the asset itself is accredited at MAVIR, at the TSO for AFRR services. And that was the very reason why the market was a little bit stopped next year, because nobody basically understood what does it mean, how can MAVIR switch on, switch off the asset if there is overproduction on the market, and what happens with that. And the good news is that we have now seen, we have now been working on with various aggregators who have worked out both from a sort of ecosystem point of view, a financial point of view, contractual point of view, and IT point of view solutions where they can offer services to the asset owners and undertake this accreditation obligation towards MAVIR. They can accredit, they can qualify the asset for the AFRR services, and they can actually even offer solutions under which this AFRR service potentially can generate further revenues for the off-taker. Now, obviously, the devil is always in the details, and it remains to be seen how scheduling with the trader, how scheduling towards the TSO and towards the aggregator works. But we believe that that there is now a solution in the market which enables this to happen. The last two slides are certain issues which we have seen in behind-the-meter PPAs, which are always there and which are really to be tackled in order to be able to implement a successful transaction or project. And the first is always stemming from the fact that the procurement demand, which is coming from the facility or the factory itself, which requires the installation of the asset, is always coming from the factory itself and normally run by the procurement teams there. These procurement teams are obviously, with certain exceptions, probably they have never done it before, and therefore they are using templates which we have seen earlier, that this is rather closer to an EPC structure and not a PPA structure. So, and if the template contract itself does not handle issues which are the cornerstone of a successful PPA, then probably that project will be doomed to fail. And therefore, it is very important from the outset, if someone is acting on the facility side, that this is to be put into a framework which enables the PPA service provider to actually submit an offer. Now, the second one is that given the AFRR issues which I have described earlier, it is very important that I believe that a successful tender can only be launched if the MGT for that asset is already in place, because it will set out in detail what are the AFRR requirements, what are the technical and financial conditions for the grid connection agreement. Now, the third one, which I have to mention, is that obviously there can be periods when either the factory is down, or for some other external reason, not all the production can be taken over which the asset is producing. Now, in that case, if the fact that it cannot be taken over is not due to the PPA service provider, i.e. the asset owner, then that missing generation must be paid for. Otherwise, the cash flow will not be financeable. And that brings me to the next question of bankability, and that bankability is really a key cornerstone of a successful behind-the-meter PPA. I mean, if this is a large enough asset, I don't know, 10, 15, 20 megawatt, then normally the investor would not want to finance this from equity, and would obviously want to either construction finance this or later refinance the equity which is put into this. And then that bankability requires certain sort of legal structures to be used in the PPA. For example, the cash flow and the asset must be capable of being collateralized, which means that either a fixed charge or a floating charge must be registered over that asset. The receivables, i.e. the cash flow, will be pledged and will be assigned for the financing bank, etc. And very important, and a very important factor is this, what I call here, and on the next slide, as early termination. Yeah, I mean, these PPAs are normally 15, 20 years PPAs, which means that a lot can happen, which the parties cannot foresee. The PPA can terminate earlier than the parties expected. It can be due to breaches by the PPA off-taker. It can be due to breaches by the PPA service provider. It can be force majeure, a lot of reasons. Now, what is important from bankability perspective, that the cash flow necessary to pay the debt service must always be secured. So whatever is the reason for the termination, the facility owner, the consumer must understand that the project finance cash flow, the DSCR, must always be protected. Otherwise, even if the PPA terminates and the asset will transfer to the facility, to the off-taker, that means that the debt service must be taken over by them, and then they have to if they can renegotiate the facility agreement. But that's very important. Also, what the investors will expect is that if the PPA is terminated by the off-taker, then they obviously expect that the net present value of the total cash flow under the term will have to be paid for them. Otherwise, they will lose the expected IRRs. So, just to summarize in a nutshell, it is very important to structure the PPA properly, pay attention for the permitting process. If you plan something like that, make contact with a qualified aggregator who can advise you on afrr requirements. But we do believe that 2024 will be a breakthrough year for behind the PPAs. And I think by this I would leave room for some questions.
Thank you, Csaba. Indeed. I think also thank you very much for this explanation. I think we'll go on to the Q&A. Also, given the sake of time, let's check maybe if Istvan is also enough, because we have a couple of questions. I mean, allow me to filter them a bit. Let's start maybe first with the range of prices that we see in the market right now. So one of the questions is, what are the current ranges of the FIT mechanism and merchant prices, and what do you generally see as an acceptable range of IRR for investors coming to the Hungarian market?
I don't know whether Istvan is here, but I would defer this
I
to
see
Istvan.
Exactly.
Yep.
We see him here. Maybe Istvan. Exactly. So what prices do we observe right now? What kind of IRRs do we see in the market? What is an acceptable level that you would say is satisfactory?
Satisfactory, you mean for buying a project on an RTB basis?
Yeah, exactly. We did not have the specification in the question, but let's take this as an assumption for now.
Look, last year the prices for the RTB projects was really on peak, just because of the power prices. So and the developers were in a crazy, filling in a gold rush case. So I heard transactions over 200,000 euro per megawatt case. Yes, well, EDP is much more conservative, so we believe in cash flows. We believe in long-term revenue. So what I see that the market is much better consolidated. So let's say the RTB projects with a reasonable COD, it also depends on that. It's between 80 and 120 K per megawatt AC, and it's also usually including the land. So it's you capturing the price in the land. So this is I would say it's rather a normal story, and the market is developing. So what is happening? Not just RTB projects to be sold, but also new type of agreements are arising. So let's say co-development, and obviously there are significant discount on prices in case of co-development, because in that case the developer don't need to risk their own money. The professional partner take over this risk, and that can consolidate the prices as well. And the second consolidation, let's say discount factor, it's rather the time when the project will be online, and practically those projects which receive 2030 or 2029 COD is almost priceless. So it's I do not see that there is market for that kind of project. But for a reason, yeah. And
no,
also.
Sorry.
Yeah, and there is one also important factor. Too early projects also not good. So let's say if you will see a project with a COD to 2024, and it is a 20-50 megawatt size level project, I definitely do not suggest you to go for it if it is not in an advanced stage. So because you need to consider the long construction time of substation, whatever. So it's again too early. It's again a price discount.
Thank you. Allow me maybe to take just one more question. Given that we touched also on the topic of PPAs before, we also briefly spoke about this guarantee to foster PPAs, and we are indeed seeing that in Hungary is happening now here. The question is if there was already a discussion about this guarantee, and what would be the qualifying criteria for the off-taker, the pricing mechanism, and also to which extent this guarantee will be provided. And let me also add, the question is also if it will cover only termination risk, or will it be studied in order also to give some guarantee of annual revenue to the producer?
Well, let's say it is still in a boiling pot. Okay, so it's and it's boiling pot in the central bank lab. So it's and I'm not entitled to talk instead of the central bank spokesman. What I heard, the intention is at very first to prevent the early termination of the contract, which is a significant risk, and Csaba can hold this part. Which means in that case the guarantee fund will take over the payment part of that, but and will also cover a significant part of the payment, because on the other hand this electricity is produced will be produced and sold on the market. So practically, if you are considering it, it's not 100% payout from the fund, because in that case the fund will flourish from the market, from the HUPEX and the electricity market power prices. So we just need to consider the difference. This is the main reason, and it can reduce, let's say, the guarantee structure of the PPAs. And we also, in the discussion with several potential Hungarian payers as the company, we are obviously considering a significant part of the structure, the guarantees. And if this fund can act to resolve this question, the whole market will be much more liquid.
And I will take, Csaba, if you allow me, we can take also the time from here. one very question with snapshot answer for you. Robinhood tax in 2024. What are the rumors? Do you think it will be reduced? Where will it go? I know it's a bit of a crystal ball question, but what's your rumor?
Yeah, I would love to answer that in a way that that it will go away, but we see no sign whatsoever. Robinhood tax going away. So even
we advise to factor that in.
Yeah, so it's this is obviously a very important tax structuring question, how you take that into account. And it's what is very interesting in this is that the higher your PPA price compared to your capex, the larger the hit, right? So I mean, very recently we had a discussion where my clients have been actually taking into account the overall impact of the Robinhood tax. And given that the price which they were offering in this PPA structure was very competitive, therefore the impact of the Robinhood tax was pretty low. But you know, and that's the sort of catch-22 in it, right? So it's the more successful you are with reaching higher prices, and the more EBITDA type Robinhood tax base you have, the larger is the impact of the Robinhood tax. So obviously, a good tax advisor can structure this in various ways, but we expect this to remain with us.
To minimize it, to stay. Well, we still think we will try to keep it up with a good note on what Istvan said before. Don't be scared, of course, by this mechanism. We're still here for the Hungarian market. I think, Csaba, Istvan, thank you very much for your contributions. For those also that joined, we'll be seeing each other on December the 6th in Budapest for Solarplaza Summit Hungary. Csaba and Istvan will also be there. We had a lot of questions, so apologies we were not able to answer them all, but feel free also to get in touch, of course, with the gentleman here. And I think we can leave each other with this optimist prospect. And gentlemen, thanks again for your presentation and your insight today. And for the rest of you, we'll see each other at Solarplaza Summit Hungary on December the 6th. Thank you all.
Thank you very much, Nicola. Thank you for organizing this. And thank you for the audience for listening.
Thank you. Bye.
Thank you all.